Hi everyone, in this video I'm going to highlight my favorite three Cathie Wood stocks to buy for 2023. Of course, her ARK Innovation ETF portfolio has some of the most innovative companies existing in the world today. Out of these companies, I'm going to pick out my favorite three, so let's get right into it. My first stock to buy from Cathie Wood's portfolio is Roku. Roku's trading at a price to free cash flow of 66.86 and a price to sales ratio of 1.762. The stock is not cheap, and this is a characteristic of Cathie Wood stocks is that they don't trade cheaply. They're innovative, usually high growth companies in industries that are expected to grow rapidly, and so investors have jumped onto their bandwagon, you could say, and trying to capitalize on that growth. Roku is one of those. The company is riding the secular tailwind from consumers switching from traditional cable connections to streaming content. The company stands to benefit from the continued millions of users that will continue switching over to streaming content. Um, so Roku is one of my favorite Cathie Wood stocks right now. The next one is Roblox, the metaverse pioneer, trading at a price to free cash flow of 286 and a price to sales ratio of 7.36. Again, this is not a cheap stock. Um, just like Roku, this company is benefiting from the rise of the metaverse. It's adding millions of daily active users, usually younger, the kids in the younger generation, about 8 to 12 years old, I would say, is the most popular cohort on Roblox. The one catalyst that I like about Roblox heading into 2023 is that it's about to launch advertising to on a more meaningful scale on its platform, and that way it can monetize more of its user base. For now, for historically, it's only been monetizing users that deposit money on the platform. Now it could capitalize on folks that are using Roblox but not putting money on the platform. That's my second Cathie Wood stock to buy in 2023. The final one is Shopify. Again, not cheap, trading at a price to free cash flow of 577 and a price to sales of 8.3. Shopify, of course, helps merchants establish an online presence and expand their online presence. The company did an excellent job during the pandemic, acquiring millions of new or hundreds of thousands, maybe millions of new customers. And as consumers spend more money online, Shopify stands to benefit. 2023 may be at least in the beginning, maybe a little bit of a headwind for Shopify as consumers spend more of their money away from home and not online. But longer term, I fully expect consumer online spending as a percentage of all consumer spending to continue to increase. Spending online is just so much more convenient than spending in brick and mortar stores, and for that reason Shopify will continue to benefit from that tailwind. So something that's common among these three stocks is that they're all benefiting from a tailwind, and they're also all trading relatively expensively. Even though each of these stocks is down considerably in 2022, as I showed here, according to these metrics, they're still not cheap, right? A price to sales of 8.3 is still not cheap, even though it's down from the peak of nearly 60. It's still not cheap. It's just back to levels that where it was at around 2018, before the explosion during the pandemic and 2021. Um, so because of that, I would like to uh, put a little asterisk in these recommendations and say that if I was interested in investing in these three Cathie Wood stocks, I would not buy any of them in any amount in the first quarter. So January, February, March, I would not be buying any of these stocks. The first quarter is going to be, in my opinion, a continued volatile quarter, as the Federal Reserve is still increasing interest rates. It will continue increasing interest rates, it has said, and inflation is going to be uh, remain relatively high, at least January, February, March. However, after February and March, inflation figures are expected to come down dramatically, because we're going to be comparing from recall Russia's invasion of Ukraine was around February and March. So as we're comparing today's fuel prices with those of last February and those of last March, today's fuel prices are lower than that. So inflation will start to moderate, and that would relieve some pressure from these volatile from these Cathie Wood stocks that are more sensitive to interest changes in interest rates, um, because their cash flows are expected to come so many years into the future, right? As with innovative stocks tend to be. Okay, so these are my favorite three Cathie Wood stocks. Just be careful with buying them in the first quarter, because of the volatility in interest rates and the impact it's going to have on their stock prices. All right, so that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.